In a commentary you wrote for Kitco, you saw gold prices going to 2,500 in three waves. Um, what gets us there?
Okay, so we've already had the first wave. We've gone from when about October 2018 to about now, just a little bit prior. It's when interest rates had dipped down significantly. We're pushing on to basically the brink of negative interest rates. That's what pushed us all the way up here. Now we're in this sideways kind of pattern shopping around. It's frustrating a lot of investors. But what's going on is that the Federal Reserve is propping up all U.S. equities and the prices of most assets right now. Okay,
Mhm.
that's causing this fear of missing out in the equities. So people are constantly bidding on those. Okay, remember earnings are coming down significantly, and people are thinking that we're going to come out of this coronavirus, out of this rioting and looting, and then things are going to get back to normal and prices are going to go up from there. The reality is on the equity side, earnings are going to continue to fall, unemployment's going to continue to rise, the dollar index will start to rebound a bit, a safety value play will come into effect, and that's when gold prices really take off because the Fed is completely handcuffed right now. They can't raise rates. They have to constantly throw money at it, and people are going to realize that earnings are going to fall on the equities. The flight to safety on gold gets us that next wave higher.
Interesting comments about interest rates. Do you think we actually see negative interest rates, given that Federal Reserve Chair Jerome Powell has pushed back strongly on this idea?
They won't get negative most likely in the US. They'll be priced negative like they are on the Fed funds
Mhm.
futures and some of the euro dollars going far out. They won't get there on the actual yield curve because of the fact that they're going to use those targeted yield reductions in holdings. If you look at the yield
Mhm.
curve right now, it hasn't moved. Equities have skyrocketed. The yield curve hasn't moved. Rates should be going up right now. So the interest rates are going to continue to hold at these low levels. The stock market will decline once earnings come into effect. The ship will right itself on this thing. And then that's when gold starts to take back off to the upside. Silver is the one that's questionable. It has to decouple itself from being tied into, manufacturing and being this industrial metal. Where that precious metals cap, which it's been doing, look at the chart pattern on silver, it's been catching up to gold.
One of the things you say, equities is going to um, suffer because of earnings, but we haven't really seen equities follow fundamentals for a very long time. Like this liquidity uh, just drives markets to record highs. I mean, we saw it last year, um, and I'm just sort of wondering the amount of money that the Fed, like, can you fight the Fed when they pump so much money into the system?
It's what it is it's not only like the Fed being pumping money in the system, buying and propping up these assets, it's other foreign central banks out there. And I like to kind of put it in perspective. Back in February, we had all the businesses shut down. If you're a bar, a restaurant, a retailer, you have shut down. You've liquidated your inventory. You've thrown out all the food and everything else in the restaurants. Now, 2 months later, no cash flow has come in whatsoever. You're getting ready to reopen. You buy all new inventory.
Mhm.
Then, across the United States, looting strikes, rioting strikes. Buildings are burned down. The retailers have all been just completely pillaged. Bars and restaurants have been destroyed. This is everywhere: Chicago, New York, LA, all across the United States. Now that poor owner needs to rebuild their building, buy new inventory, still no cash flow, and hope customers will come. I don't think it's going to happen.
So do you see what's your timeline for 2500 gold? I mean, you do paint this very bleak scenario for the US economy. Do you think we get to 2500 by the end of the year? Like, is gold going to take off like a rocket sort of after this summer lull period? Or is it going to take more time to get to your target?
It definitely takes more time. This is what's going to happen when we come out of the second quarter and people have the euphoria that they're going to get back to business. We were close to having it already. Gold futures will actually decline just a bit, I think, in the third quarter. Okay, that's where your value. You need to be looking at buying these dips. Don't have the
Mhm.
fear of missing out. Sell a little bit at the top of the range, buy a bit at the bottom of the range. But I think once we come into fourth quarter and they actually realize that the earnings are not coming back as soon as possible and that the Fed's going to continue to support, that's when it's game over. I think in the next year, that's when we start to take off. I really think it's going to take longer. It always takes longer. Unless you have a complete crisis on we can't get supply, things like that. You start to see a physical squeeze go on. That's when we get the accelerated moves up. But I think it's gradual. And if you look at gold over years, the chart pattern has been a steady, constant increase. Every major dip you have to buy, and you hold on, and you do well.
So last question, how does the US dollar play into this? I mean, we have seen the US dollar pare back a little bit, but gold prices haven't really enjoyed that. We were talking offline and you were saying, gold is basically acting like its own global currency. How does this fit into your expectations?
Look, you have to see that gold is a currency, and we put out a great macro book for people to download where it shows gold's performance against every major currency out there. And the chart pattern is very similar. It gets stronger with some of the weak currencies, it gets a little bit weaker with stronger currencies. But if you look, the chart pattern is consistently from the lower left corner to the upper right across the board on almost all
Mhm.
currencies.
And just briefly, so silver, I mean, you say silver's a bit more of a challenge. Where do you see silver prices in all of this?
So, I hate to say it, but if silver decides it's going to be this manufacturing commodity, this industrial production commodity, it's going to get hit at the first phase of a down leg on the equities. Okay. But what'll happen is gold investors and precious metal investors, they know that if you want to go out to the coin shop, it's going to cost 25 bucks for a coin. They will buy the silver futures on the dip and they will support the market and it will snap back and correct, just like we saw those few days back in March where we came up and we just like a skyrocket going back higher. That's when the physical supply squeezes come in. So those dips, you need to be buying on these little rallies. Don't sell the whole position, just sell a small position, 10%, 20%, a third, but hold your core position, trade around it. That's how you build cash flow, build momentum, and then you could really take advantage of the setbacks.
Fantastic advice, Phil. Thanks for talking to us about your outlook for gold.
Yeah, thanks for having me.
Thank you very much for joining Kidco News for the